appreciate your time and really appreciate Casey's time. Casey's going to be the presenter today. He's with Northfield Savings Bank. And yeah, I'll just pass it off to you. So thank you for your time, Casey.
Sweet. Thanks, Sophia. I was actually just telling Sophia before you folks logged on that I am not only experiencing some slideshow issues, but also some camera issues. I would normally have my wonderful face up, but computer's not allowing that. So that said, I'm just going to kind of dive right into things. Kind of want to thank all of you for joining me today. I'm Casey Gafori. I'm a mortgage originator with Northfield Savings Bank. I've been with the bank for about 4 years, and I've been lending for 2. And I've really found kind of a fun career in that I find a lot of joy in helping people on their paths towards homeownership. Something I get to share that joy with you tonight, as each one of you are on your own paths towards homeownership. So, a little more background. I work out of our Williston branch, Taft Corners, but typically I find myself bouncing around Chittenden County on any given week. Spent a little time down in Richmond today. Like I'm all over the place. Bank's been around for 150 years, and we originated down in Northfield, Vermont. Currently, we got 13 branches and kind of an extensive history. As of today, we are the largest bank headquartered in Vermont. So it's great. Love it. Love NSB. Great people. That said, before I dive into things, just want to open the door. You're welcome to ask questions throughout. Raise your hand, chime in. Feel free to just interrupt me. I also have a little time set at the end where we can ask questions then, but figured I'd offer it now. Sophia, go ahead and move that along. First slide here, a little overview for today. Going to talk about the process of homeownership, start to finish. Regardless where you are on this journey, I believe there are some steps that will kind of help guide you for the remainder of the way. Buying a home can be long, stressful process. Having the right people by your side and really knowing that kind of the next steps is what's really going to help you achieve homeownership in a pretty stress-free way, hopefully. That said, we are going to start with kind of the step 1, understanding your finances, knowing maybe when the right time to buy a home is, then how to choose a lender, how to get ready to meet with said lender, what that meeting will look like, selecting a realtor, maybe once you're pre-approved, you're out shopping, what are some potential red flags to look for in that property? Now you've found a property, what's that approval or what's the next steps for that? Once we work through that, then what's the approval process look like between gathering new documents, things of that nature, all the way to the last step, closing. You got your keys, you're in a brand new house, excited, and then the kind of the last minute takeaways before you just go and live a happily ever after. So just going to start right from the top, understanding your finances. You want to zip forward, Sophia? Thank you. Most important thing with understanding your finances is knowing what you're working with your credit history, your existing debts, job history. In the mortgage space, lenders really key into your credit history. So that's going to be your credit report. Is there any history of late payments? What do you have for existing debts out there? Whether that be credit cards, student loans, car payments, personal loans, anything like that. I do also like to share with folks that there's a way to pull your credit for free with no impact to your credit score. Go to annualcreditreport.com, something that you can pull annually for free, no cost to you, no impact on your score. It's a great way to just see what's out there, see what the minimum monthly payments are that are going to be shown, see what a lender was going to see when they truly pull your credit. Also a good way to track your score. If maybe we're thinking buying a home a few years down the road, we can pull the credit report every year to see our score keep going up. There's other credit monitoring apps that you can use, but having a actual credit report really helps know where you stand with your credit history. Um, in the lending world, I focus on what we consider a monthly basis. So your income on a monthly basis, your minimum debts on a monthly basis. So the credit report is really going to help show those existing debts. What are those minimum monthly payments? Uh, Job history. That the job history depends whether we are self-employed or we're just an hourly employee or we're salaried, something like that. Something to also consider, if there's maybe going to be a quote unquote co-borrower on this application, if you have a spouse or a significant other or something like that, maybe a parent that's going to sign on to this loan with you. Kind of job history of everybody involved. For self-employed borrowers, we want to see at least a 2-year history of employment in the business that you own, and that's how we'll track your income. We'll derive that directly from your tax return. Um, for a kind of waged employee, we don't necessarily need that in-depth 2-year history as much as we do for a self-employed person. We still need a 2-year history, but it doesn't have to be at the same job. Um, so for self-employed borrowers, we look at 2 most recent years of tax returns to calculate income. And for those hourly employees or salary employees, we look at pay stubs to kind of get that. Next thing, understanding where's your down payment coming from. Maybe you have a brokerage account or your savings account, checking account, or some other account that you plan to use for your down payment. Do we have a number that we're comfortable with? Say, I have $10,000 saved and I want to use $5,000 towards my down payment. Um, just kind of understanding where we are at on the savings. Another thing to consider is, would I be receiving any potential gift for this purchase for the down payment or closing costs with this? Maybe a parent or a relative or something like that would be willing to give you a gift to get you into a new home. Um, that's kind of the good starting basis of really understanding your finances and getting ready for the next steps. That said, Sophia, if you want to slide to the next one. Um, After we kind of understand our finances, then it's going to be, all right, I think I'm ready. I'm going to sit down with a mortgage lender. Before I do that, who do I pick? Great question. I would love to say pick me, but you should consider a bunch of different things. Having a good mortgage lender on your side, a good realtor on your side are kind of 2 big things that'll help kind of get you catapulted in the right direction. So, first question a lot of people ask is, who do I bank with? If I have a good relationship with said bank, do they have a mortgage department that I could chat with? Another good one is maybe you have a friend or a family member who just bought a home and had either a good or a bad experience, and they could help navigate you one way or another. Um, if you're already working with a realtor, they might have some recommendations on people they work with. Um, Ask them. It really, I guess, overall, it's choosing someone who you know is going to be on your side and advocating for your best interests. Um, I prefer for my customers, I love to sit down and meet in person. It gives me a chance to really get to know you, get to know your situation, and really just best grasp how I can help kind of guide you on this path to home ownership. Um, Another thing that's especially important in Vermont is to really understand or to really choose a lender that knows the market that you're looking to buy in. Vermont real estate is not necessarily challenging, but there's some differences that arise property to property, and having someone who is familiar with those differences and challenges is very beneficial. What I found with being in this mortgage industry and chatting with a lot of like-minded folks within the industry is having a local lender is extremely important. Um, we have boots on the ground every day. We see properties in the area every day, um, and we can kind of pinpoint red flags and know kind of best way to guide you there. Um, that said, um, local lenders also kind of know what condo associations maybe to steer you to or steer you from, or the quirks that a property offers. It's again just super helpful to have somebody like that. You also want a lender who you know is going to have the right program and product for you. So, what type of mortgage can they offer? What maybe grants or down payment assistance do they offer? Um, we at Northfield Savings Bank, we are a partner bank with VHFA, the Vermont Housing Finance Agency, where we have full access to all of their programs that they offer. Some really cool, great ones with maybe some reduced interest rates or grants, closing cost assistance, things of that nature. VHFA is a great great company out there with some really good products that we can offer. We also offer rural development loans that's 100% financing, which means no cash down, um, but there still is some associated closing costs. We are also a partner bank with the Federal Home Loan Bank of Boston, where we can offer some of their really, really awesome programs, most notably the Equity Builder program, Housing Our Workforce, Lift Up Home Ownership, the Permanent Rate Buy Down. Um, all of these are options that you have when you work with a local lender, someone that knows kind of the full Vermont landscape and what products are out there. Uh, there's also some really good um, institutions out there like Champlain Housing Trusts, where they offer shared equity properties. Something I can touch on a little later, but Champlain Housing Trust, Wyndham and Windsor is another one down south. Down Street is kind of similar shared equity homes in central Vermont. And what a shared equity home is just, I'm going to make up an example here. So let's say there's a $400,000 house out there that Champlain Housing Trust owns. So they go and they're going to sell it to somebody. Champlain Housing Trust will put some equity into the property, and then they'll sell you the property for, call it 250,000. So they'll contribute $150,000 kind of as quote unquote shared equity. When you eventually sell the home, you will then pay Champlain Housing Trust off. But it's a great way to get your foot in the door and own real estate, and then start being able to really take advantage of the appreciation that happens over time when you own property. Those are some really cool programs out there. How are we feeling? We're a couple minutes in. I've kind of zipped through, talked a lot. Feel free to stop me if I'm going too fast. Got any questions? Uh, Feeling good?
Yeah.
Yeah, sweet. Sophia, you want to jump to the next slide? So once you have kind of chosen, all right, here's who I want to reach out with, and I encourage you to do that with maybe a couple different banks and see who really vibes with you the best. I've selected them, and now I'm going to go meet them. I typically, like I said earlier, like to do this in person. Not a requirement at all. Happy to do it over the phone, stuff like that. But what typically happens in those meetings is we'll chat about um, how much home you can afford. What would a monthly payment on that house look like? Um, what would my cash to close be? How much money am I really needing to bring to the table? Um, Kind of as we lead up to that meeting and preparing for it, the documents that'll be super helpful to bring so that your mortgage lender can completely understand and have the most accurate figures would be your most recent bank statements. If you're self-employed, your two most recent years of tax returns. If you're not self-employed, your most recent year of tax return. Um, any bank statements you're going to use for the down payment or closing costs or anything like that. Um, really getting a grasp and kind of gathering those documents together um, is kind of the first steps towards that meeting preparation. Now, for the initial meeting, and Sophia, if you want to jump ahead, in that initial meeting, it's typically about an hour, but from earlier, by this time, you kind of know your finances. Maybe you know what you're looking for, where you're looking to buy. Um, then the lender can go through those documents with you and kind of share their knowledge and go through that. What can I afford? What's my monthly payment going to be? Cash to close, all of that kind of stuff. Um, Something I like to do with my borrowers is there's a difference between what you're going to pay for your mortgage and what kind of your all-in monthly payment for the house is going to be. Um, so what you're going to pay for a mortgage is typically the principal and interest, and that's what folks will quote you on, and that's just what you pay to the bank or whatever institution you go with to obtain that mortgage. Additional costs associated with owning the home would be paying property taxes each year and insurance. And then maybe it's a condo or a townhouse where there's homeowners associations. Um, in that initial meeting, I really kind of drive home here's your all in costs of owning this property. So the principal and interest that the bank keeps, the taxes that we have to pay to the town, the insurance that you have to pay to your insurance provider, the association dues that you have to pay to your homeowners association, um, kind of really getting a grasp, making sure that can fit into your budget. Um, 'Cause I never want to get in a scenario where I quote somebody, here's your mortgage payment, and I only chat principal and interest. And then they go under contract for a property and then realize this is going to cost me way more than I can afford. Um, I don't want that to ever happen. I want everyone to get to the closing table confident that they're comfortable in their mortgage payment and that they're just super excited to own their home. Um, so it's the initial meeting. Typically, in that hour, we bounce around. I know I've already touched on it, but the what can I afford, what the monthly payment's going to be, um, maybe some program options that I chatted about earlier. Maybe it's some first-time home buyer programs if you're a first-time home buyer, um, stuff like that. Um, then, kind of once we get to near the end of that, we chat about all right, here's what I can afford. Here's what I have for money to put as a down payment and for the closing costs. Um, do I have enough? Slash, am I ready? That's what really should come as a conclusion to that initial meeting. Uh, Whether or not you're ready from a bank standpoint and from a personal standpoint. If you are, great. Let's move forward with a pre-approval letter. Get you out so that you can start shopping and really being a serious buyer in the market. Um, if you're not necessarily ready, what can we do now so that 3 months down the road we are ready, or 6 months, or 12 months, 2 years, whatever it may be? Um, what can we do so that you're ready and we have a different answer? We have a yes sometime in the near future. Uh, the initial meeting is a lot, very informational, but you end up leaving with a full knowledge of what truly can I afford, and it's very, very beneficial. After you have that initial meeting, and let's say the time is right, we are pre-approved. Now what? Next slide, Sophia. So now maybe we already have consulted a realtor, but if we haven't, now would be a good time to get a realtor involved. Um, I always tell folks if you're not working with a realtor, I'm happy to send you some recommendations. It is no pressure at all, but I'm happy to throw some names your way if you would like. But I strongly encourage folks to get a realtor that is going to be on your side and that's going to advocate for you. Um, Realtors are really the experts of the market and homes for sale, and kind of the current market trends. They see it and kind of do it for a living. Um, the realtor's somebody who's always going to act in your best interest, and it's really important to have a good one on your side. They do way more than just negotiate the purchase price. Um, they can help negotiate maybe some concessions, which are some money that the seller is going to give back to you to help with closing costs. Or maybe they can negotiate for some work to be done on the house prior to closing. It's good to have one in your corner. I Why I say I strongly encourage it is because 99% of the time the seller pays the real estate commission for that realtor. So having a realtor that represents you, the buyer, it's pretty much just having a free advocate on your side. So something I strongly encourage. Once you have someone that you're comfortable on your side, you're pre-approved, you love your mortgage banker, you love Casey, he's awesome. You love your realtor, they're awesome. Now we're shopping around. So, Sophia, next slide. Uh, as we're shopping around, a couple things I would like to just point out now. And these are all things that your realtor will help highlight. But some things to really consider from a mortgage standpoint. In that initial meeting when we were chatting, maybe you told me that I was looking to buy a single family house, but now I'm thinking, maybe I want a condo. Um, Condos have additional monthly payments associated with them in the form of homeowners insurance or homeowners association dues. So those HOA dues, call it $300 a month, can push your numbers kind of over the edge and get your monthly mortgage payment too high if that's something not factored in beforehand. So consider what did I tell Casey I was going to be looking for. If my plans change and like, hey, maybe I do want to consider a condo versus a single family home from the jump, um, I'll give him a call or shoot him a text, send him an email just to let him know, hey, here's where I think I'm leaning. Can we rerun numbers? That's something I'm always happy to do. Um, but as you're shopping around, consider what you're truly pre-approved for. Um, Something that we don't necessarily see often, but can and has become an issue in the past is you buy a property that, or you make an offer on a property that is under renovation. So there's some construction going on in the property. They're currently replacing a couple walls and there's no drywall in there. Those should just be, oh, I'm touring it, red flag. The property's under construction. There's different ways to finance construction. Um, just kind of alarms going off in the head. What about some deferred maintenance items? Maybe we see that the roof's got some leaks and I'm going to need to replace a roof, or um, maybe the windows are broken and I know I'm going to need to replace some windows. Like, what are maybe some items that I know I'm going to have to fix from the jump? This can maybe mean that some other issues might be going on with the home, but um, it's going to definitely mean some additional cash out of pocket from you, because you got to fix that roof, you got to fix those windows, that kind of stuff. Um, and then properties that are always weird are the half commercial, half residential properties, kind of mixed use stuff, where those are often seen as, call it like a hair salon or a shop on like the first floor, and on the second floor there's residential apartments. Um, those are a little more challenging to finance, and they're typically zoned differently. So uh, Just something to consider as maybe a little red flag. Talk to your lender before making an offer on the property. What about a property in foreclosure or being sold as is? Um, that's can be fine and can be something you work through. But if it's being sold as is, an appraisal that we order on the property, maybe some issues come up in it, and then you're stuck having to fix the property before you even own it. Um, so some some kind of just another red flag. Um, functional obsolescence. That's a fun one and something that's a little more rare nowadays. Um, you see it sometimes with older homes, and what I mean by that is example that I have seen. Maybe the only way to get to the spare bedroom is to walk through a bathroom. Uh, like weird quirks like that with a property that maybe don't keep the value of it, or maybe the value of said property isn't what we think it is because there's some kind of functional obsolescence there. Um, there's many more red flags that your realtor can help out with, but these are just some that are kind of important that I'd like to bring to your attention. Next slide, please, Sophia. So you've done your shopping, you found a property. Congratulations, kind of time to celebrate. But we're under contract now, so we got to keep kind of moving down the road here. So the clock starts ticking. We have in that purchase and sale agreement that you sign after making an offer on the property, kind of saying, I will buy your property. There's a closing date and other dates that are entered in that contract. So um, the clock's ticking now. We consult your lender. Your lender is going to need um, the purchase and sale agreement, the property tax bill, your deposit that you're going to pay, because the ball starts to move pretty quick. And although most of the time after you go under contract for the property, you have 30, 45, 60 days before you close, that time flies. Um, so as soon as you go under contract, call your lender or email your lender, let them know, woohoo, I did it, I found my home, um, that kind of thing. Um, Kind of the final step of that is maybe you have an attorney that you want to work with, or your realtor or your lender can um, help guide you on some attorneys that they love working with, and um, kind of that kind of thing. But kind of a decent amount of legwork from the jump once you're under contract. Although there is some celebration involved there. That's an awesome step of the journey. So we're under contract. Now what? Next slide, Sophia. So now we kind of start the journey towards our approval process. So, uh, as mentioned prior, the contract dates mentioned in there, uh, we got to kind of try to meet them. They're very important, and we don't want to miss those dates. Let's, for example, say you got pre-approved with me 60 days ago, and now you're under contract for a property. Well, maybe some of the bank statements you sent me and maybe some of the pay stubs you sent me are a little outdated. Or maybe it's a new tax year and you have new W-2s that you could send my way, or you filed taxes. I might need some updated documents. And that's where we will completely, quote unquote, underwrite the file and send you, hey, here's a list of items we need kind of to get you ready for closing. Um, Arguably, the most important 2 points here are the don't quit your day job and maintain your financial standing. Um, what that means is you're under contract. We're working towards being approved and cleared to close so that we can completely buy the house and move in and celebrate and kind of live that happily ever after. While that whole process is going on, don't quit your day job. Changing employment could change the status of whether or not you are approved for your loan. So Um, I tell people, no matter what, just stay employed till past closing. Like work, 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 at least until we get to the closing table, or at least until we after we get to the closing table. Same goes for your financial standing, and what I mean by that is, let's say someone doesn't have a car payment, and then they week before closing they go out and they buy a new car that they're going to pay $500 a month on, as either a lease or a kind of like a monthly payment. Uh, we then have to consider that a new monthly debt, and maybe that pushes your numbers the wrong way, and we can't approve the loan anymore. Um, so just kind of keep everything the same. Don't do anything crazy that's going to change anything about your income, anything crazy about your finances. Um, I kind of being in the industry, you hear the horror stories of folks who have quit their job like day of closing or prior to closing or something like that. Or you hear about someone who goes out and buys a new car like right before closing, something like that that can really offset and kind of sway things the wrong way. That's worst case scenario. Never want that to happen. Um, as part of after you're under contract and we're working towards getting you completely approved and ready for closing, we're going to order an appraisal on the home you're buying. Appraisals, the timelines differ depending on the time of year and the location of the property. In Chittenden County, you typically can get an appraisal turned around pretty quick in 2 weeks or so. Um, but somewhere maybe a little more rural, um, it might be harder and be closer to 3 or 4 weeks. I've seen appraisals take as long as 6 weeks to come in. Um, so it's something to consider that when to order the appraisal so that we can continue to meet your dates in your contract. Another step that's kind of a little homework to do item for folks once they're under contract is you're soon to be a homeowner, so you need to purchase homeowners insurance. Um, Start shopping around. I always advise people, who do you buy your car insurance through? You typically get a nice discounted rate when bundling your homeowners and car insurance. So kind of start there, branch off, shop around. Me and your realtor would be happy to send you a couple people who we trust that are we think would kind of get you some good quotes. Once everything's tied together, you don't owe us anything else. We're good to go document wise. We have your insurance, we have the appraisal back, all squared there. We issue what's called our clear to close, and I know I've mentioned it a couple times, but that's a fancy word for saying you're ready for closing. There's nothing more you need to do on our end other than bring the money. Uh, at that point, our closing team is going to work directly with the seller and the seller's attorney and your attorney to kind of iron out the final numbers. Maybe there's maybe the seller has paid. Let's use another fun example. The seller has paid taxes through the end of 2026. Well, if the seller's kind of selling the home today, we got to reimburse them for the taxes they've already paid. Um, those are all things that the attorneys can kind of work out to make sure all money is square on all fronts. Once that closing or once that clear to close is issued, our closing department will schedule that closing, and that's when they'll officially start working on those numbers. Um, that is a very exciting milestone of this journey because you're officially cleared, ready to go. Just waiting on a couple days to get to the closing table. Get to sign a bunch of documents. I think next slide, Sophia. So once we're cleared to close and we're at the closing table or getting ready for it, um, the fun part is getting the keys for the property. So typically the day of or day before closing, you'll do a walkthrough of the property and make sure the seller has um, gotten all of their personal belongings out of the property. There's nothing wrong with it that we need fixed, anything like that, and that the buyer and that you are comfortable with the property and you're kind of ready to proceed. Um, we're good with that. Then the funds for closing. Two different options that you can do. If you have a local bank, I always encourage people to bring certified bank checks to closing. Go into your local branch, tell them, hey, I'm buying a home today and I need a check for X amount. It's the safest, most secure way to get funds from you directly to the attorney. You can also wire the funds directly from your account to the attorney. But I always caution people there's a lot of wire fraud that exists in the real estate world. Um, it's challenging and realist and scammers have gotten very good at imitating attorneys or imitating lenders or imitating whoever to convince folks to wire the money to the wrong account. Uh, Again, I circle back to my first point. If at all possible, bring a just certified bank check. It's the smoothest, quickest, securest way to bring the money. On top of bringing the money, you have to bring your ID to validate who you are is really who you are. And then you get to have your attorney review all the documents with you, and you get to stretch out that hand because you're going to do a lot of signing. Once we get to the end, you're officially a homeowner. You get the keys, you get the garage door openers, and you can move in. Um, it's a very fun time. Everyone's smiling. Um, Extremely rewarding on all aspects of that. Uh, Next slide, Sophia, if you will. After you move in, it's good to know when's your first mortgage payment due. Uh, Something interesting as your first mortgage payment. Let's use today for example. You buy a new home today. Um, you will not have a mortgage payment on May 1st. Your first mortgage payment would be on June 1st. So typically you skip the next first of the month, and then your first mortgage payment is on the following first of the month. Um, so after move-in day / at closing, you want to know when's my first mortgage payment due. Something I always help my buyers with is if you want to set up auto pay, I'll do it. I'll even bring a form to closing so that we can do it, and then you leave there and don't have to worry about it again. Um, Another thing is um, escrowing taxes or insurance. Escrow is a way for you to make one mortgage payment that covers your principal and interest that the bank keeps, the taxes that we have to pay the town, and the insurance that we have to pay to your insurance provider. You make one monthly payment to us, and we set aside some money for taxes and some money for insurance. And then when those come due, we'll pay them for you. Um, there's no additional fees associated with that. And it's something I strongly encourage folks to do is escrow their taxes and insurance, as it gives them some peace of mind and really helps with budgeting so you don't have to make a huge lump sum tax payment when those come due. Um, However, with escrowing taxes, something or taxes and insurance, it's something to highlight is your mortgage payment will slightly go up over time. Uh, that's just as taxes and insurance kind of naturally gets more and more expensive over the year. The amount that if you get a fixed rate mortgage, the amount that you're paying directly to Northfield Savings Bank will not change. But the amount that we have to pay out to other providers for taxes and insurance will. So that's why payment will go up and down. Um, PMI is something I meant to address earlier, but glazed over. PMI is private mortgage insurance and is a monthly fee that you pay to an insurance provider if you put less than 20% down on a property. So anytime you put less than 20% down, you have to pay private mortgage insurance. Um, PMI naturally falls off after you have 20% equity of your home, but you have to have it for at least 2 years. So once it's been 2 years and once you reach 20% equity of your home, that should automatically drop off. Technically speaking, the automatic fall off of PMI does not happen until you have 22% equity in your home. But when the day comes where you think you have 20% equity in your home, call up your lender and say, hey, I have 20% equity. I want PMI to fall off. And they will be able to do that. But it does not automatically fall off until 22%. Um, as a local lender, we at Northfield Savings Bank retain all of the servicing rights for our loans. So if you ever have any questions post closing, you can always come to us and we can always help you out. Um, there are some other lenders in the industry that sell the servicing. So if you go with, we'll call them Bank A, maybe you'll get your mortgage through Bank A and then they'll sell it to Bank B. Um, so when it comes time, maybe a year from now, you have a question, you call Bank A and they're like, we don't have your mortgage, we sold it to Bank B, and then you got to go track that down. Um, benefit of working with someone local is that we keep your servicing here. Um, and you can always work with us. Only caveat to that is if you obtain a VHFA, Vermont Housing Finance Agency mortgage, all VHFA lenders are required to sell the loan to US Bank. So if you get a VHFA loan, you will be working with US Bank. Um, that is the only exception to us keeping everything in house. Um, that said, I believe that's all I got. Next slide, I think, is just questions. There's definitely probably some items I've missed, but I just want to open the floor to you all. I kind of zipped through that pretty quick here. And I know there's maybe some items that we can dive a little deeper on. We got 15 minutes or so. So please take it away.
Hey, so this is Amanda. So I guess one of the questions I have is you have to hire an attorney separately from your real estate agent. So did I gather that information correctly? Like the attorney's not involved directly with the realtor?
Um, in a way, yes. So the realtor is someone who's going to work with you from when you start looking at houses to after closing.
Yes.
The attorney is someone who only gets involved after you go under contract of your home. And
Okay.
that attorney is someone who will make sure all of the history of the title on the property
Yeah.
is clear. And so they do the title search slash all the title work.
Okay.
They also do kind of all the stuff with sorting out the numbers between seller and the bank and stuff like that.
Yeah.
The attorney typically represents the bank and the buyer as one. They can mutually represent both. There's an attorney list that can do both. There's some out there that don't do both and they only do one side. Um,
Okay.
but that's something you don't need to worry about until after you go under contract for the home.
Okay. But that's essentially another anticipation of financials is that you're going to have to find an attorney to take care. That's another expense, if you will, to keep in
Correct.
mind.
Correct. And in that initial meeting that you have with your mortgage lender, the closing cost breakdown that they should go over with you and run through, there should be already those fees built in. Um,
Okay.
so what that attorney will charge, and I'll tell you, our attorneys charge $700 for the
Okay.
title search, and then $700 for the settlement fee, and so that's to conduct closing and run all the numbers and stuff like that.
Okay.
Um, so that $1,400 in total is something that I quote straight from the jump, so that it's not a surprise that comes later,
Okay.
rather something that you can anticipate straight up front.
Okay. Good to know. Um, God, what was it? I just had another question in my head and it left. Uh, um, home inspectors.
Yep.
Is is that part of how does that come into play? Is that something a potential buyer has to invest in themselves, or is that part of what the realtor does?
Yeah. So home inspections, it depends on the property. And I'll tell you a little history on those. For a little while there, when the market was crazy during COVID and there was some cash offers coming, things were just flying as soon as they became listed. A lot of properties weren't getting inspected.
Yeah.
And so, but now they're slowly coming around, and I advise you to consult your real estate agent for that. And when you're making an offer on a property, that's something you have to negotiate whether you are going to do an inspection on the property. It is not required from a lending standpoint,
Really?
and I don't. That's also something I don't necessarily want to see. That's something. If you want an inspection, you get an inspection. That is a fee that you pay, not the seller. But your real estate agent, it will be somebody who can help coordinate when that inspection takes place and help you really analyze the results of that inspection.
Well, help me understand from, a bank perspective. I mean, I want to buy this home and then the bank, they give me this loan and we find out, there's major plumbing issues or there's major. So, I mean, I would assume the bank wants to protect the investment as well. So
Mm-hmm.
where do
Great
they
question.
come into play to be like, okay, yes, you're buying a property that, you're not going to sign this paperwork and 20 days later, the roof crashes in or there's things that weren't anticipated. Like, where does that come into play?
Yeah, that's a great question. So, the bank, although we don't require an inspection, we do require an appraisal. So, the appraiser for the property will be looking for those big, major, glaring issues. They'll make sure that the plumbing works as expected, that the electrical works, that the roof's in decent enough shape. Uh,
Yep.
they're not going to the extent that an inspector would, where they like climb up to the roof and really view it in detail. Or sometimes an inspection is like you do a scope of the septic system. Uh, that's not something the appraiser does, but the appraiser is really looking out for those major issues. Um, Given sometimes there are some things that happen where you'll buy a property and the heating unit just stops working, something like that. That's something that the inspector can't necessarily anticipate. They can highlight the how old something is, uh,
Hmm.
but they're not really diving in. They'll make sure it works
Okay.
and that they think it will continue to work, and that's pretty much it. So the line does blur a little bit between what an appraiser does and what an inspector does, but the
Okay.
inspector really dives deep and kind of looks at things under a microscope, if that makes sense.
Okay. And again, that's the homeowner's choice, and that's kind of an outside cost of the homeowner's choosing whether they want to go into that much detail.
Yep, the inspection, yes, the appraisal is required.
Okay.
Yep.
Okay. That's good to know. Thank you.
Mhm. Yeah, of course.
I have a follow-up to that.
Yeah.
So if you do get an inspection or an appraisal and they find something wrong, whose responsibility is it to fix that, or is that something that is negotiated?
That that's a great question and something that there's not a straight 100% answer on. Depending on the scope of what's wrong, is dependent on who will fix it. So,
Mhm.
for example, if there's a big hole in the roof, that's something the seller is probably going to need to fix before closing. Um, but if there are those major issues that kind of occur that get highlighted, that's something you and your realtor can then go back to the property seller and be like, "Hey, here's what we found. How do we approach this? Let's renegotiate. Um, Maybe I'll pay for it, but you're going to reduce the purchase price of the home,
Yep.
or um, maybe you fix it and something else happens so that it does open a renegotiation window. But that's something I don't necessarily want to speak a lot of because your realtor would be able to help you on the true path forward if something like that were to happen. But those major issues the bank would want to see fixed prior to closing.
Okay.
Yeah. Any other questions? Of course. All right. I see we got a hand up. We got a question?
I was just wondering if you could talk a little bit about like USD rural loans.
Mm-hmm. Yeah, so the USDA Rural Development Loan, realistically, most of the state of Vermont is considered rural. There are some small areas that aren't, but the majority of the state is. The rural development, that program is 100% financing, so no down payments, but you still have to pay closing costs. There are some pros and cons of said program. There's some additional fees associated with closing costs, but it could potentially be a good starting point for someone with not as much money to bring to the closing table.
Yeah.
Actually, let me look. The rates might be higher. 1 second here. Actually, it might take me a little bit to find those, but it's a decent product that it's situationally dependent on whether or not it's the right fit for people. But the folks who don't have as much to bring for the down payment and closing costs, that's when it can be really impactful. I know that was pretty vague, but it's tough to kind of dive into without kind of a knowledge on the situation, if that makes sense.
Can I ask another question?
Of course.
Can you use a USDA like rural housing loan in combination with like a Section 8 homebuyer program? Do you know?
I think you stumped me. I'm not sure on that. And I'll tell you kind of the reason behind that is I've never worked with the Section 8 home buying program. It's something I'd be happy to kind of look a little more into it and circle back if that's something you'd like.
Okay, thank you so much.
Yeah, of course.
And I'm also happy to connect whoever with Casey after the fact. And then I also will send a follow-up email with Casey's information if anybody's looking to follow up.
Thank you.
Yeah, thank you, Sophia. That'd be awesome. Cool. Keep them coming. What other questions you got for me?
Oh,
Anything?
kind of stumped right now. You really did go over a lot. I'm sure questions will come after the fact, but
I have another question.
Yeah.
Yeah, so having, been working with people, can you give like a rough estimate of sort of like where like down payment costs are right now?
Yeah. So I like to tell people the maybe who aren't going rural development. Other programs are typically a minimum of 3% down. Kind of the 3 to 5% down payment is that sweet spot where your opportunity kind of opens up a little more. And then I also estimate closing costs at an additional 3 to 5%. Closing costs maybe not as high. Those typically run, and it depends on the purchase price of the property, because there's a pretty large closing cost called the Vermont transfer tax, which is something that for every real estate transaction you pay to the state of Vermont. It's kind of their cut of every transaction. It's a nice little thank you payment to them. So it's tough to accurately quote closing costs without knowing purchase price of properties. They typically run somewhere in the $5,000 to $10,000 threshold closing costs.
Ooh.
So call it 5,000 to 10,000 plus 3 to 5% would be what we're looking for. With that said, there are some really cool programs out there that are having down payment assistance or grants that help with closing costs and down payment, um, things of that nature. And something, again, knowing which of those would be right for you is situationally dependent. So happy to kind of run through numbers and we could see maybe, hey, these programs can help with down payment assistance and closing costs. Or maybe, hey, we aren't eligible, unfortunately, for these. But tough to know whether or not we can secure those without knowing the situation. Conclusion: 3 to 5% for the down payment, and then call it 5 to 10,000 for closing costs. All right. If we have no other questions, I'm gonna kind of wrap it up and thank you all for
Thank you.
joining me. It was a pleasure. I love. I don't know if you could tell. I love speaking about this. This is kind of my niche. I love the kind of quote unquote first time home buyer space. The really getting people that journey from start to owning a home. Very fulfilling. So I love this. Please don't hesitate to reach out if you ever have any questions. I would love to follow up with maybe run some scenarios with folks if you think that would be helpful. No pressure at all. If maybe you have a friend or a colleague who you think would find info like this informational, please pass along my name, or I try to host these webinars pretty frequently. So I know this one was recorded, but maybe one in the future they could attend.